Hello traders and investors, and welcome to Trade with Raymond. Now in this Ichimoku Master series, today I'll be talking about dangerous brokers. Before you can trade the market, you need a broker. A broker is responsible for providing the technology for you to be able to do your ask and bid or your buys and sells. They link you to the market, they link you to the banks, and they are so important in this ecosystem of trading. However, there are good and there are bad brokers. I have been bent before. There was a broker called WWM, Worldwide Markets, and they operated out of Dubai, and they vanished into thin air, and that was it. I lost my money. Many people lost their money. Some people lost $100,000, $200,000. So much money was lost because of a lack of due diligence. Many years down the line, I have learned so much, and I'm here to help you so that you avoid dangerous brokers. One, you need to find out whether the broker is regulated. The stiffness of the regulations depends on the country the broker is coming out of. For example, in the UK, they have the Futures FCA, Financial Conduct Authority, FCA. They are responsible for regulating brokers in the FX and stock trading space. If a broker says they come from that place, you need to find out from their website. All the information is there, and you will see. If you don't find the broker there, it means the broker is not regulated to provide you the service they are providing. One trick is this. Sometimes you see brokers in Africa who will show you a certificate of business registration from some UK organization or the Registrar General for that matter. And then they will say that they are regulated here, and so you can do business with them, and then they fold up after a few months. I've seen that happen. When you see the business registration certificate, that is not enough. You need to go to the Financial Conduct Authority website and check whether that broker is regulated. You will find it there. If you don't find it there, that broker is not regulated, you can't do business with the broker. It's dangerous because they will fold up and take your money away. It keeps happening. If it's from the US, you have the CFTC, Commodity Futures Trading Commission, and they have another one also that's responsible for regulating the brokers. If you go to Japan, they have them. If you go to Cyprus, they have the CySEC. You must check whether a broker is regulated. If a broker is regulated, let's say in the UK, the leverage they provide is usually 1:33, and then I'm told some European countries can do up to 1:100 or 200 if you're a money manager. Initially, most brokers were providing 1:500. So there was a heavy collapse in the market, a lot of money was lost, and then the brokers started reducing from the US. So US is 1:50 leverage. Japan follows suit, is also 1:50. And generally, the MT4 technology can handle 1:500. So any broker who comes to you and touts a leverage of 1:500, first of all, you need to find out where is the broker coming from. If it's coming from Australia, the leverages may be different, New Zealand, and so on and so forth. But then, no leverage should go to beyond 1:500. It doesn't make sense. Even 1:500 is too large for you as a trader, because your upside is high and your downside is pretty high. So if you're losing deep. And as a trader, you must protect your asset. So you don't throw all your capital into the market expecting it to become money overnight. That's dangerous. So you need to check the regulations. Now, sometimes brokers are smart, and you need to watch this. You will see a broker that is regulated in Europe and is providing a leverage of maybe 1:33 or even, let's say, 1:100. However, a portion of their website that faces certain areas, for example, the portion of the website that faces Africa, can provide you a leverage of 1:1000. I've seen a leverage of 1:3000. That is entirely rubbish. Nobody can trade in that space of a leverage of 1:3000. Yet, if you look at their website that faces the country in which they are regulated in, they don't show such leverages. It means that you are being sucked in and you don't follow such high leverage. It tells you that the broker is up to something, and you need to be careful in choosing the broker. Second point is that Most people focus on tight spreads. Tight spreads are good, but some brokers really market tight spreads so much that they tell you there's zero spread. When a broker tells you there's zero spread, it's not true. There's a commission you pay. And when a broker tells you no commissions and spreads are too tight, there's also a hidden price you pay. For example, euro-dollar spread maybe, let's say 2 pips, no commission. A broker tells you that I'm providing 0.01 spread and then no commission. That's dangerous, because usually trading a small account, what is a broker going to make? The broker has staff, they have regulatory fees to pay, they have technology fees to pay, they have so much to manage, yet they are not willing to charge you spread. That's not true. So what the broker will do will often slip your account. There'll be a lot of slippages so that the broker can make up for the money they have told you they don't take. And most of the time, traders are not so experienced, so they don't see the slippages happen. For example, your take profit is at, let's say, 1,000 on a price. It gets to 1,000, it doesn't take profit. It gets to 1,003, then it takes profit, but gives you 1,000, keeps the 3 for themselves. Similarly, when you are losing, they do same. So you need to be careful. Don't just follow a broker that say low spread, low spread, low spread. Slightly higher spread is even good, because the broker provides you solid technology, no slippages. They are able to provide you very good services. So it's important not to just chase spread. Customer service. A broker that's not interested in talking to the client when the client has a problem is a problem on its own. Some brokers have initiated technology and talk to an android, a robot, and the robot doesn't understand what you're saying and keeps giving you options, and it's so difficult to get to a human. That is a broker you should avoid. The broker should take out the android and have a human face so that they can speak to the client. One more point here. Money transfer methods. I have seen brokers that tell you, okay, fund your money with your card and withdraw by crypto. That's a criminal. That's a wrong broker. Anti-money laundering policies are clear when it comes to brokers. If you fund by your card, you receive by your card. If you fund by bank wire, you receive by bank wire. If you fund by cryptocurrency, you receive by cryptocurrency. But a broker who tells you that fund in cash, I'll pay USDT, that is a dangerous broker. Or say, oh, give it to my agent, your account will automatically be credited. So in some cases, you have a broker that says, I have an agent here. You want to fund $10,000, give the money to the agent. The next morning, your account is credited. That's dangerous, because there's no paper trail. There's nothing showing that you really sent money and that is real money, because it could be a demo account that is written live on it. Technology is there that can be done. So it's very, very important to know that. And last point, when you are setting up a live account with a broker, it's very important to note this. You must use your national IDs. If a broker is not interested in taking your ID and verifying that before you open an account, that is the broker going to run away with your money. Because this is banking. Trading is banking. You literally are you're doing business, finance. And you can open an account and the broker is not interested in your ID card, whether it's genuine, whether it's a national ID card. I remember some time ago, a broker was taking just a health insurance card from any health insurance provider to allow you to open a live account. That broker will take your money out. That broker will steal your money. So traders, don't be in a rush. Good training, good psychology. Bad broker means losing all your money. So it's very important. You need to get this clear before you put money into the market. If you're not sure about broker, just follow what I do. You'll get a good broker you can trade with. It's important. No broker should put pressure on you to trade more. If a broker is asking you to trade more, it's asking you to lose. Less is better. More is bad. Thank you very much. Subscribe, send to a friend, ask more questions, and gradually we are coming to a close of the Ichimoku series. Soon we'll be ending, and then we'll put it together as a full lesson for you to follow, practice, and become a profitable trader. Thank you very much for following, and bye-bye.